group stocks once again. Let's just have them one by one, the intradays. Let's start with ports, which I think opened in the green, opened higher. And then we kind of move on to the other names. Ports is up 5%, 626. We were making that point on Friday as well. At one point, Adani Ports was down 24-25% mid-afternoon on Friday. It closed about 10% off the lows. I mean, at least in terms of assets, in terms of just familiarity with investors, etc. This is the oldest, the most big cash generator for the Adani Group, and it's visible in terms of the price reaction. I mean, I have to say, in a way, it may still look bad, but it's more discerning. I mean, it's not everything down kind of a day for even within the group. But let's have the others up as well now. So this is Ports, Adani Enterprises, the holding company. Will come up. Ports power is down 5. Enterprises, where the FPO is on, should come up next, and then we'll look at the other 2 or 3 names. Enterprises is also up about 5% or so. Adani Green, Total, Transmission are some of the other names where there is significant selling pressure. 19% down on Total. Adani Transmission and Adani Green are down about 15% or so, whereabouts. So there is a fair bit of pressure, but the one difference is that there is within the group, with ports being up, I mean, I think you could say that markets being a little more discerning with what is going on. 125 points lower on the Nifty, 17,486 is what we have as we begin another trading session. Gautam Shah is with us. He's founder and chief strategist at Goldilocks Premium Research. Gautam, good to have you with us here. Thank you very much. With the significant selling we've had, I think price levels, etc., have broken. A lot of sort of averages that have come under pressure. But what about indicators themselves? Simple things like the Nifty RSI, or RSI across a bunch of stocks. What I'm getting to is the market getting a little in the oversold territory in the very near term. What's your sense?
Good morning, Prashant. Well, I think markets are far away from turning oversold. I think if you look at it from a traditional standpoint, what has really played out over the last 4 to 6 weeks is not a plain vanilla correction. I think what has happened in the last 1 week, the foundation to the same was laid in the month of December, because I think the market went through a gradual transition phase. It was a sort of a distribution phase. And even when I was on your channel in the first week of January, there was just no optimism on the charts, because the market kept correcting from resistance levels, and thereafter the news flow just followed. Because I think this break below 17,800 was just a formality. Many of the technical indicators had indicated to the same, and it's just played out, beautifully over the last 4 to 5 weeks. If you look at the technical data itself, the momentum on the downside have been far greater than on the days when markets have seen upside. The leadership was not there. I think I mentioned last time that banks and Reliance, the 2 big pockets of the Nifty, were looking very weak on the chart. So what would have actually taken the market higher? I did not have any names. The overall bar quality, the fact that you had some trendline breakdowns, the moving averages broke, and the fact that India has been one of the biggest underperformers in the last 6 weeks. So all of this just alluded to weakness. It's already played out, and I think it's going to get worse before it gets better, because there are no signs of bottoming out on the charts. And my numbers on the downside, I think for the very near term, 17,250 to 17,300. So that's where some of the technical studies have coincided to indicate some support, and you have the budget in a couple of days. So maybe the market finds some support there. But I think eventually the chances of a deeper cut is quite high. And on the upside, 17,800 and 18,050, till these numbers are not crossed, we would maintain our bearish stance.
Just a quick word, guys. Look at the market, right? We're down just 20 points. I mean, just like that. All the significant losses, 100 plus points, it's all disappeared. The day's high now, by the way, we are at the day's high, and the market is in a very powerful way coming back almost into the green. And this is what I was talking about. The open is one thing, the SGX is one thing, but the real action will transpire in the trading hours today. And this is, I think, the first of, I guess, many moves we are seeing. We are back almost in the green. Will we come back into the green? Let's stay with that. Almost 15,600 is where we are at. 15,603, by the way, is the day's high now already. So this is quite amazing. The close on Friday was 17,604, and we came within 1 or 2 points of turning green. And all of this happening very, very sharply. Let's put up Reliance Industries. I think that is the one which has come up very, very sharply from the day's low. It's up in a very, very powerful way. The intraday will tell you that. And I think that's 11-12% weight in the index, making all the difference to the overall market at this point in time. Sonia.
It also speaks about how volatile this market has become, right? With so much news flow thrown at it. So it's almost a 1% recovery in the first 10 minutes of trade. 17,446 was the low that we hit. We're back above 17,600. There are, of course, pockets of calm in the market as well. So just look at something like a Bajaj Finance. It's now your top gainer, up 3.5%, post a good set of numbers. But then again, within the Adani group, there are extremely diverse moves. So really volatile market. Gautam, good morning. This is perhaps one of the most challenging times, right? Because you have this overhang globally of perhaps a recession coming through, interest rates are moving higher, and then locally things are very sticky with all the news flow. You mentioned this level of 17,250 to 17,300. If that breaks, which is the 200-day moving average, what is the next level that you're watching out for on the downside? And is that your base case scenario? And who do you think could be the leaders in the next level of the downtick of the market?
So yeah, we need to realize that the markets have already seen a lot of weakness. 18,900 has become 17,450 today. So that's almost a gradual and even a vertical kind of a drop. And therefore, we were very slightly oversold on maybe some of the very shorter term indicators. But if you look at the daily and the weekly charts, as I said, there are no oversold signs. And while 17,250, 300 could be a stopover point from where you could possibly see a bounce, I think eventually a break of the same and a move towards 16,900 and maybe lower is quite possible. And you need to understand that this has just become an India-centric fall at this point of time, because global markets are all very steady. US markets, European markets, Asian markets, all quite steady in the last 4 to 6 weeks. And if you look at the ratio charts of India versus the world, we have been in this downtrend. Now, the big question is whether world markets start and correct in line with what India has done, or India will eventually bounce back and, be in sync with the world. I think the former is going to play out, because on the Dow also, 32,500, 34,500 is a sort of a range. And if the Dow were to correct from those upper ends, then I think there could be weakness for global markets as well. So I'm just not too optimistic. As you rightly said, it's a very volatile environment, given all the news flow around the Adani group, the budget, recession, etc., etc. So I think this is going to continue for some time. It's going to be a joyride both ways. But I think the takeaway on the charts is that we are in a downtrend and rallies will get sold into.
All right, we have a bit of a relief rally that's underway. The Nifty is up close to 180 points from the low point of the day. The Nifty bank as well, just take a look at the U-turn out there. So there is some bit of an attempt to see a relief rally at best. As Gautam has been saying, and we as well have been pointing out that the recent support, that'll be a bit of a resistance which comes in at around that 17,750 to around 17,800 odd mark. However, risk reward has favored a buy today at the day's low. Let's see how this pans out. Well, Gautam, you're clearly sounding a little bit skittish. This relief rallies could get sold into. What about the Nifty bank? That's taken a harder knock. There was this consensus trade out there that the Nifty bank is going to do well. The banking stocks are on their way up, fundamentally, technically. That's come to around 40,000 odd. What's your view out there? How much lower can that one go?
Yeah, it's actually a very big fall that we've seen in the last 1 week. 1,000 points for 2 consecutive days is something that we've not seen on the Bank Nifty for a very long time. And to be honest, the charts have spoiled completely, because, the Bank Nifty was the poster boy index for 6 full months. June through December 22, this was the index that actually propelled the entire market higher. And we've seen over the last couple of decades that when the banks do well, the market is safe. When the banks don't do well, the market is just not safe. And even at this point of time, I think there is room for more weakness. Our working target on the downside was about 39,600. And I think we got close to that today morning. And that's probably the reason we are seeing this bounce. But I think if you look at the weekly and the monthly charts, there is clearly a lot more room on the downside. So rallies will get sold into maybe another 1.5% upside. But thereafter, I think 39,600 is likely to break, leading to a move towards 38,500 and below. And many of these top stocks, which have done so well in the last couple of years, ICICI banks and the Kotex and the Axis and the SBIs of the world, have all developed weak charts on the weekly and the monthly time frame. I don't think this is going to get sorted in a hurry.
Gautam, I have 2 questions. One is, so your slightly medium to longer term view on the charts has changed? You flipped from bullish to bearish?
Well, Prashant, we live 5 years in 3 months. That's the way life has become on the chart. So, you have to be very agile. You need to be nimble-footed. I still want to maintain a bullish stance from a longer-term perspective. But if I have to take a view for the next couple of quarters, I would want to believe that this market is not headed significantly higher. I think we are going to be in a range, or we are going to, see gradual moves on the downside from time to time. So longer term, I think the India story is intact because I think that doesn't change. Corrections can come and go. But short to medium term, clearly there is a lot of pressure. And this India underperformance of the last 6 weeks is something that we've not seen in 3 years. We've not seen since the time we started recovering from March 2020. And that's not a good place to be in. And I also want to believe that a lot of positives based on which India tested 18,900 is now in the price. And the negatives are not discounted. When you have developments like Adani, and if you have any move in global markets, recession, etc., I think that could really impact Indian markets.
Okay, just a quick word on, because we're heading into the next discussion, which is on the auto space. Autos are one pocket that have come out after a long lull period and now showing some degree of outperformance. Do you think in this entire, this sort of volatile environment, will autos be a hiding place, both technically as well as on the fundamental side?
Well, I think for me, number one is IT. I think I spoke about it last time as well. I think I love the way the IT index has shaped up in the last 4 to 6 weeks. Look at what TCS and Infosys have done. Look at some of the mid-cap IT, Coforge and Persistent have done in this recent fall. No impact whatsoever. So I think IT is clearly looking like a place to hide. It's not that it's going to see a runaway rally. It's just that it's going to be in a sort of a range, and it's not going to move in sync with the overall market. But as you also rightly said, I think auto index looks great. But I'm not very sure whether it can really, again, see a big rally. I think it's just going to get into a range. Many of these auto stocks have rebounded from support levels, whether it's a Bajaj or Maruti or a Tata Motors. So I think there could be some stability on the screen. But the problem is at some point of time, autos and metals are very high beta. So if the market were to eventually go down and crack lower, I don't think they're going to be very safe. So if there are two pockets where I would strongly recommend to hide, that would be IT followed by PSU, and outside of the equity markets, gold and silver.
Okay, IT, PSUs and gold and silver. Of course, gold is one asset class that has been zooming, right? And while everyone's been worrying about what happens with equities, gold has steadily been gaining ground. Thanks a lot for joining us, though. That's a cautious view coming in on the markets. 17,200 to 300 is the next level to watch on the downside. If that breaks, then perhaps we're heading towards 16,900 as well. So a bit of caution is what Goldilocks has thrown up, I guess.